Right now, the United States is more than $34 trillion in debt. Its politics look chaotic, its rivals are louder than ever, and yet, when the world panics, money still runs straight to America. That's not an accident, that's power. So here's the real question. In 2026, with all the noise about decline, why is the USA still the world's most powerful financial superpower? Let's slow this down, because if you actually understand this, you'll understand how the global economy really works and who secretly controls the rules. Think about the last time the world felt uncertain. A war, a banking crisis, a recession scare. What did investors do? They didn't rush into Chinese bonds. They didn't pile into gold. They bought dollars. They bought U.S. Treasury bonds. Even people who criticize America still trust it with their money. That contradiction is the first clue. Here's a simple question for you. If the U.S. is supposedly declining, why does the world still lend it money at low interest rates? Drop your thoughts in the comments as we go. To understand this, we have to start with the dollar. Right now, around 85 to 90% of global foreign exchange transactions involve the U.S. dollar. Let that sink in. Almost every major trade deal touches the dollar somewhere in the process. Oil, mostly priced in dollars. Aircraft, dollars. Global commodities, dollars. Even when two non-American countries trade with each other, they often settle in dollars. Here's a simple example. Imagine a company in India buying oil from Saudi Arabia. You'd think rupees and rials would be involved, but in reality, the deal is priced in US dollars. Both sides need dollars to make the transaction happen. That single fact forces global demand for the dollar every single day. And because of that, global banks hold dollars, central banks hold dollars, governments stockpile dollars. As of the mid-2020s, roughly 58% of global foreign exchange reserves are still held in US dollars. That number used to be higher, yes, but here's the key point. There is no real replacement. People talk about the euro, the yuan, even gold or crypto, but none of them can do what the dollar does at scale. The euro has political fragmentation, China controls capital flows tightly, gold doesn't move fast enough, crypto is volatile and unregulated, so when push comes to shove, the dollar wins by default. Now let's talk about the hidden advantage this gives America. It's called seigniorage. Sounds boring. It's not. Seigniorage is the profit a country makes by issuing the currency the world uses. The U.S. can print money at a very low cost, and the rest of the world accepts it as real value. Foreigners hold trillions of dollars in cash and U.S. assets. That's essentially an interest-free loan to the United States. When the U.S. runs a trade deficit, it sends dollars abroad. Those dollars don't disappear. They come back. They're used to buy U.S. stocks, U.S. real estate, and most importantly, U.S. government debt. America consumes, the world finances it. Here's a shocking fact. The United States can buy real goods and services from other countries using pieces of paper it controls. No other country has that privilege at this scale. That's not just economic strength, that's financial leverage. Quick question for you. If you were running a country, would you rather be a massive exporter like China or the country that issues the currency everyone must use? Think about that. Now let's address the elephant in the room, U.S. debt. Yes, the debt is enormous, over $34 trillion and climbing. On paper, that sounds terrifying. If any other country had numbers like that, investors would run, their currency would collapse, interest rates would explode. But that doesn't happen to the United States. Why? Because U.S. Treasury bonds are still considered the safest asset on earth. Not the cheapest, the safest. When global markets panic, money flows into U.S. bonds, even if yields are low, even if inflation exists. Why? Because the U.S. has deep capital markets, a long legal history, strong property rights, and the ability to tax a massive productive economy. There's also one uncomfortable truth most people don't say out loud. The U.S. debt is denominated in its own currency. The U.S. cannot be forced to default the way emerging markets can. it can always pay in dollars. That doesn't mean there are no risks. It means the risk profile is different. During recent global crises, foreign demand for treasuries actually increased. Investors weren't asking, is the U.S. perfect? They were asking, where else can we go? And the answer was, nowhere big enough. Now let's talk about the Federal Reserve. This is where the U.S. power becomes almost invisible. The Federal Reserve doesn't just control interest rates in America, it influences financial conditions for the entire planet. When the Fed raises rates, global borrowing becomes more expensive. Capital flows back into the U.S. Emerging markets feel pressure. Their currencies weaken. Their debt costs rise. You've seen this happen. A single Fed press conference can move markets in Asia, Europe, and Latin America within minutes. No other central bank has that kind of reach. Not the European Central Bank, not the People's Bank of China. Why? Because global finance runs through the dollar system. Banks borrow in dollars. Corporations issue dollar-denominated debt. When dollar liquidity tightens, the world feels it. Here's a real-world scenario. A company in Brazil borrows in dollars because rates are cheaper. The Fed hikes rates. Suddenly, their debt payments jump. The Brazilian currency weakens. The company struggles. This chain reaction starts in Washington, D.C. and ends halfway across the world. That's power. Now, let's talk about China. This is where the conversation usually gets emotional. China is an economic giant, no question. It demeans manufacturing, it leads in infrastructure scale, it's a critical part of global supply chains. But financial power is not the same as production power. China's currency is not fully convertible. Capital controls limit how freely money can move. Foreign investors don't fully trust the system. Legal transparency is weaker, and during times of stress, money flows out of China, not into it. Even today, wealthy Chinese citizens often try to move assets into dollars, U.S. real estate, or foreign accounts. That tells you something. We are moving toward a multipolar world. That part is true. The U.S. share of global GDP has declined from its post-World War II peak. Emerging economies are rising. India, Southeast Asia, parts of Africa, they matter more every year. But a multipolar economic world does not automatically mean a multipolar financial system. In 2026, global capital still wants three things: liquidity, safety, and trust. And the U.S. still delivers those better than anyone else, even with its flaws. Let me ask you another question. If tomorrow there was a global financial shock, where do you think the biggest pools of money would run first? Be honest. Now, this doesn't mean the U.S. is invincible. There are real risks ahead. Debt servicing costs are rising. Political polarization creates uncertainty. Weaponizing the dollar through sanctions has pushed some countries to seek alternatives. Digital currencies and regional trade agreements are slowly reducing dollar dependence at the margins. The key phrase is at the margins. Replacing the dollar is not like switching apps. It requires deep markets, global trust, legal systems, military protection of trade routes, and decades of credibility. You don't just announce that, you earn it. In 2026, the U.S. still controls the financial plumbing of the world. Payment systems, clearing mechanisms, capital markets, and as long as that remains true, America remains the financial superpower, even if it doesn't always look like it on the surface. This is why headlines about U.S. decline can be misleading. Power doesn't always look loud. Sometimes it looks boring, stable, trusted, and unavoidable. If this breakdown is helping you see the global economy more clearly, make sure you subscribe to Financial Underpinnings. This channel is about understanding the forces beneath the headlines, not just reacting to them. Before we wrap up, one last question for you. Do you think the dollar will still dominate in 10 years, or are we slowly watching the beginning of the end? I want to hear your take in the comments, because in the next video, we're going to explore something most people completely miss, the one scenario that could actually threaten U.S. financial dominance, and why it wouldn't come from China at all.